Hello and welcome in this tutorial on how to use the valuation with multiples precedent transactions financial model template. So this template will allow you to estimate the value of a certain company based on past transactions of other companies. So in the inputs tab, you will be able to find the inputs that you can change. So you will change the currency and adapt the currencies to your specific currency that you want to use. Then add revenues, cost of goods sold, selling, general and administrative costs, other costs, and so on, so that we can derive the income statements metrics for the target company for which you want to derive the value. Then the same with the balance sheets metrics, like assets, inventory, and so on. And then the data regarding the precedent transactions. You will have a list of transactions that you want to assess, up to 6. And for a given company, you can input the revenues at the time of the transaction, the EBITDA, EBIT, net profit, book value of equity, market cap, and net financial position for each of the companies that you want to consider. Then the next tab, multiple calculations, you will see that the multiples have been calculated. So we calculate both equity side and asset side multiples with the price to earnings and price to book value multiples on the equity side and enterprise value over sales, EBITDA and EBIT on the asset side. And then of course we compute the average, median, minimum and maximum, so that when we calculate the company valuation, we can create a valuation fork between, for example, maximum, minimum, and average and median, both for equity side and asset side. So for equity side, we derive the equity value using the average, median, minimum, and maximum multiples that you can see here for both price to earnings and price to book value multiples. And then for asset side, we derive enterprise value first and then equity value as well.